Hey, welcome back to the dive. Sprott Uranium Physical Trust listing, uranium price, royalty model, risks, and the company's initiative to optimize carbon emissions are some of the topics that our guest will cover today. He has over 37 years of experience in the nuclear energy industry. The CEO, president, and director of Uranium Royalty Corp, Scott Melbye, is joining us today. But first, just a quick reminder to tap that subscribe button if you haven't already. Hey Scott, welcome to the dive.
Great. It's great to be here, Cassandra. My pleasure.
Yeah, it's so great to have you. Okay, so let's start with the uranium market. It looks like we're starting to see a change in attitude towards nuclear energy. What do you think is driving this change in attitude?
Yeah, well, it's interesting to see for someone who's been in the industry for over 30, close to 40 years. I'm really seeing a more broader based acceptance or at least interest in nuclear energy today and how it fits in our real race towards a lower carbon, cleaner energy future. And nuclear being as clean and carbon free as wind and solar, as safe as wind and solar, but running 95% of the time and being resilient and reliant as opposed to wind and solar, which can best provide 25 to 30% of the time on the grid. We're really beginning to see some of the strengths of nuclear energy being more widely appreciated.
Definitely. Okay, so there's been some talk about the Sprott Uranium Physical Trust listing on the NYSE. How big of a catalyst do you think this could serve for the uranium market?
Well, it's clearly, I think the underlying catalysts are really the supply and demand of uranium, where demand for uranium and nuclear energy is robust and growing at 2.5–3% per year. Production has been lagging global consumption by a significant percentage every year. But it was the Sprott Physical Uranium Trust coming in with a $1.3 billion ATM, which is an at-the-market financing, that is allowing them to come in and buy physical uranium off the spot market and store it or warehouse it on behalf of their investors. It provides a speculative vehicle for investors to invest in uranium, which would be obviously very difficult to do holding physical uranium. So that has had the effect of really drawing down any of the excess inventories that have been overhanging the market over the past 8 years or so.
Makes sense. Okay, so do you have a sense of what price uranium needs to go to per pound until we start to see a major ramp up in production globally?
Well, that's one of the attractive investment theses behind uranium is we're not an efficient market like copper, gold, zinc, or silver, but we are driven by supply and demand fundamentals. And global uranium production around the world today, some of the best mines in the world probably need $50 a pound or more to produce. Other mines much higher than that. But we've really been in a period for many years where we've been trading at $20, $30 a pound, and only recently have we reached the $40 to $50 a pound mark. So it's a great start, but I think you could have uranium prices run quite a ways before we start to see a meaningful production response, which will result in higher prices and perhaps significantly higher prices in the interim.
Okay. So for investors new to uranium mining, what are the key differences between mining uranium versus other commodities?
Well, one major difference in uranium globally today is about 50% of the uranium mined around the world today is from in situ recovery. It's very different than the mining that you might be familiar with, open pit or underground. And then it really just reverses the natural process that got the uranium into the ground in the first place, just naturally over geologic time. It reverses that process, oxidizes the uranium off the sandstone deposits, pumps it to the surface as a liquid, and you extract the uranium in a very non-intrusive, environmentally friendly way. So it's obviously environmentally very friendly approach, but it's also lower capital costs and lower operating costs. So it's not surprising that method's being used, and it certainly will be the majority of uranium mining in the United States as we revitalize and ramp back up our industry.
Okay, interesting. So could you walk us through Uranium Royalty Corp's model?
Yeah, so I'm CEO of Uranium Royalty Corp. It's traded UROY on the NASDAQ exchange. We're the only pure uranium company on the NASDAQ. But unlike the mining companies, We hold portfolios of royalties and streams, that is financial interests on other people's mines and developments, and we get paid either in cash royalties or physical streams of product when they produce. So when you invest in Uranium Royalty Corp, you're actually investing presently into a portfolio of 16 royalties in Africa, Canada, the United States, and also investing in our physical holdings of uranium that we've taken a position on coming off the bottom of the market. So it is a way to invest in this nuclear energy, clean energy story by investing in uranium royalties on uranium production developments and mines around the world.
Is there ever a fear that a royalty could impair a project's ability to receive future financing?
That's an important case. I mean, you need to look at each project individually, and I don't think we would ever want to burden a project with a royalty that would prohibit it from going into production. But it's really seen as a way for mine developers to finance their projects in a non-dilutive way. They can either finance with debt or bank equity in capital markets or through royalties and streams. And from a shareholder's perspective, that may be the preferable way to go in the current market environment we're in.
Absolutely. Okay, so the company announced new initiatives to optimize carbon emissions in a comprehensive ESG program. What could you tell us?
Yeah, so my affiliated company, our largest shareholder in uranium royalty is Uranium Energy Corp, and that is a good example of a pure mining and development company based out of South Texas with operations in Texas and Wyoming. We use that ISR method to extract uranium. But like all mining companies today, not only are we just thrilled to produce a product that is supporting the green energy economy, but we're striving to make our own operations as carbon friendly and the smallest carbon footprint as possible. So we've taken the first steps of an ESG program, which is to quantify what is our carbon footprint and set that as the baseline, and now go forward to try to reduce the amount of carbon emissions we have at our mining operations. Of course, the first step will be to secure electricity for our operations that are produced from wind, solar, or in South Texas, nuclear energy, which is all carbon free. So we're in the very early stages of that, but we're quite excited to not only be producing a green energy product, but having our operations as green as possible.
Awesome, very cool. Well, thank you so much for joining us today, Scott, and sharing your story with us.
Great, thank you very much.
To our audience at home, thanks for watching. And if you want to learn more, check out our website at www.thedeepdive.ca. Bye for now.